General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
All right. Okay. Let's go here. Q2, April, week 3, options expiry. It's Monday. It's almost not Monday. April 14th, 2025. News. Forex Factory. That news didn't do nothing. Where is this pen? Cool. Put this on the other screen. I just need my screenshot. Let's do it this way. Bam. Retail sales. Hold up. Tomorrow's Tuesday. What's Tuesday? Empire State. What was today? Waller ain't nothing. That didn't sound nice. Waller something, but he ain't moving. He ain't moving the markets. It's tariffs. Powell ain't even been a star. It's been tariffs. Let's see if Waller did anything to the Fed watch. I mean, it's hard to even say if he even did something to the Fed watch, because I know it was like some news where it's like phones was going to be exempt from the tariffs, and then Trump is like, nope, I ain't say that. Boom. May, no cuts in May starting to materialize. No cuts in May. Not even close. Let's go here. Yeah, I clicked that button too fast. 73% for June. June is looking like cuts. Cuts in June makes sense, which is the 18th of June. Earnings is picking up this week. That's why we do earnings every day, so we don't get shocked. This is the month. This is the day. Some banks tomorrow. Big banks. I mean, I know people are looking at the banks too because monetary policy, interest rates is a big deal. But this is not no NASDAQ mover. Not moving NASDAQ. All eyes on Netflix this week. Let's look at the dollar. Dollar on the daily. We still need this retracement. We even got us a gap here. I'm going to alert this. That'll work. Waiting for the dollar retracement before looking for the real move lower. I think people scared of the dollar going lower, but not the traders. Traders is like, all right, small range Monday. Small range Monday equals large range Tuesday. Look at the weekly. Previous week's high still untouched. Previous week's high still untouched. If we sell off to start the week, the move may be to the upside. We haven't induced liquidity to even frame out the move yet. This delivery is going to be interesting. Well, let's see. Hanging around, new week opening gap. There's really not no order flow here. We need speed and direction before we can get a feel on this week's price action. So far, it's just scalps. Yeah. Previous week's high makes the most sense. Like if we're going to sell up, but even if we come down, I'll be looking at 50% of here. There's nothing really to glean from here. Price, position, or location, or where price is at is not interesting. We basically went sideways all day. Engineering liquidity to run both sides. We take Monday low, you can look for Monday high. We take Monday high, you can look for Monday low. It's really nothing going on with this. Now on a small time frame, it'd be looking like, oh, look at these moves. Even this drop down, like maybe here. Push up, sell. Even take Monday's high is interesting. This low is the most interesting to me. This is a previous day's low right here. Friday's low. But this ain't no real order flow. We can smack Monday's low, push up, which will make the most sense. If we take Monday's low, push up previous week's high, then lower prices, which is kind of looking like what a form. I'm not rushing this. Lows make sense here. Low resistance target here. That's low hanging fruit. 18, 5, 68, 50. $18, 5, 68, 50 is my low hanging fruit. Objective is still doesn't give the framework I'm looking for a one shot, one kill setup. No alert set yet. We need to run a liquidity pool first. Put this in the Telegram channel. What was that? It's probably my pre-market. All right, y'all. Y'all have a good day. Peace.